Good morning, guys. It is just after half past 10 on Thursday, the 29th of June, 2023. As you can see, the market is open. This is week 1, year 12 of this 8-year fire journey. A bit of an experiment, I suppose you might say. But at the same time, what I would add to that is that essentially the time to start your fire journey is yesterday. There is no time to be lost, in as much as the conventional wisdom, which appears to have been proven over time, over and over again. In fact, if you look back historically, is that time in the market is much more important than trying to time the market, because timing the market is essentially a fool's errand. It's just not something that can be easily achieved, or well, in fact, there's nobody that can really be sure what the market is going to do without having insider knowledge, and of course that would be unlawful, if not actually outright illegal. So let's just have a look at where we are at present. I believe things have improved from the last video that I had done. The current portfolio value is sitting just over £8,000, which represents a increase of just over 4.5%. And currently, as things stand, that's actually in around about the typical rate of interest that a lot of the banks are offering for savings accounts. So I suppose, if you were to draw some kind of a comparison, if you were able to have £8,000 invested in a UK bank at this current time, if they were offering you about 4.5%, that's roughly the sort of a return that you could expect to see in interest after a year. So currently the price is sitting at 65.72. Our average price a bit below that, 62.79, say, by the time you round it off. For the day, we're up about 1/3%. For the week, about 1.25%. And let's just see how these figures continue. So the month was just a bit less than 2%. 3 months, 6.5%, say. 6 months and a year, both about the 10% mark. So those figures there actually do look quite reassuring, in as much as there's nothing too extreme there. And the sort of the 10% is hypothetically consistent with what we would expect as a sort of an average growth for the S&P 500 per year. We've got notifications on red here. Let's just have a look and see what they're talking about. So I think SPCE is at okay. So that's actually Virgin Galactic. I thought it was the other one. So Virgin Galactic up 8% ahead of the company's first commercial space flight. I don't know if the recent submarine catastrophe has done anything to influence that rise there, whether it would have suppressed it, or indeed not made any change. I find it difficult to believe that it might have boosted it. Anybody watching this in the future may not know what I'm talking about, there was a submarine that, a submersible actually, really, that had been constructed by a company. I believe the company was called Ocean Gate, and they had intended to dive down to the Titanic site, as far as I know, and essentially they tried to do it, but they didn't come back, and the consensus is that there was an implosion, probably followed by an explosion, and that basically everybody on board would have been wiped out within probably milliseconds, I would imagine. I don't really know. So yeah, that just happened in the past week or so. Probably the past few days, really. So yeah, space flight and other kind of experimental, risky exploration mission kind of a thing. But yeah, Virgin Galactic is up 8%. Following on from, there must have been an announcement or something about a commercial space flight. GIS, General Mills, down 6% as price hikes hit demand, and lower full year profit forecast. Okay. So anybody that is about these days will know that prices nearly everywhere appear to have been increased. The thing that appeared to start that off was the war in Ukraine, between Ukraine and Russia, principally. Essentially, the fuel prices saw massive increases, and subsequently then, of course, everything else that needs fuel to either be manufactured or to be moved also went up in price. However, the reality now is that fuel prices at the pumps are back, and have been back for a while, to pre-Ukraine conflict levels, and there appears to be a degree of reluctance on the part of retailers and others to actually reduce their prices back down to reflect essentially the reality now, and there is a general feeling among the public that big business is essentially sticking the arm in. They're profiteering, because although their transport costs have come back again, they have, whilst they were quick to raise the prices of items on the shelves, they have not been so quick as to bring them back down again. And for that reason, I personally I am focusing more and more on price whenever I'm shopping, and if I see something which I believe is overpriced, I will look for a cheaper alternative, and where I don't find one, I will simply leave the shop without buying it. There are very few things that you absolutely must have in life all of the time, and no matter what the price. And I think if everybody did the same, we would see retailers and indeed manufacturers reduce their prices back down again, particularly the big brands, where in the past historically we have been paying for a brand name. That needs to stop. Okay, what else have we got here? Pinterest up 6% on Wells Fargo upgrade. citing Amazon partnership potential. I think I saw something about this not so long ago, but I thought it was sort of the other way around. Okay, let's move on. Nvidia down 3%, AMD down 2%. US considers restrictions on AI chip exports to China. I'm surprised that anybody considering exporting chips to China, because my belief was that virtually all the best chips were manufactured outside of the US. Was it even Taiwan they were manufactured in, or some part of Korea? I'm not entirely sure, but I do remember the whole thing during COVID of big companies complaining that they were unable to access semiconductors that they required to make their goods, and the idea was that was going to cause supply chain problems, not just for car manufacturers but for all sorts of other goods as well. And it's just curious to see that mentioned like that. So high volatility, Ocado down 9% after Amazon denies report of possible bid. Right, so I've mixed up two stories. This is the one that I had thought I had heard something about. When in fact I was thinking of this one. So yeah, basically Amazon is not suggesting that they're going to look to buy over Ocado. And there we go. I think that's enough of a look around the notifications and so on, guys. Let's get on and we'll invest our weekly £120 worth of hypothetical money into the Vanguard S&P 500 exchange traded fund. This should buy us roughly 1.825 shares at the current price. So we've had instant execution there. I can see down at the bottom the portfolio value has increased. The numbers have updated at the bottom, but they haven't updated up here, unfortunately. So the new portfolio value is 8,168. And I see just next to that we still have free funds of 42,200, which we will be investing at a rate of £120 per week over the course of the next 7 and a bit years, given that we've already been running for a year. So yeah, it's taken a while to get to this point, but I think with the current return that we're seeing in the market there, it is showing that even when the market is difficult, with the effective dollar cost averaging, you can still come out with a positive result. Not just a positive result, but a bank beating positive result as well. If you've been watching the channel for a while, you will know that I believe that the trends that we should have expected to see continue is this trend line here, and I refer to this as the opportunity gap. Now, can you imagine what our portfolio value would look like if the market were to recover to somewhere around this point? That would be a significant return on our portfolio investment, and honestly, over the space of the next say 3-4 years, that is pretty much what I expect will probably happen, but time will tell. Guys, that is going to be pretty much it for today. All that remains for me to do is to thank you for watching, and indeed, if you enjoy the content, or if you find if you're curious about the journey, why not subscribe to the channel, and if you like this video in particular, feel free to give it a thumbs up, drop any questions, comments, or indeed criticisms into the comment boxes, and I will review them in due course. That's it for today, guys. I'll be back again next week.